The global oil market is on a roller coaster ride, and here's why. OPEC Plus has just made a move that could shake up the energy world. After much anticipation, the group decided to increase oil production, but the twist? It's a much smaller hike than many expected. This decision comes at a time when the world is grappling with the Russia-Ukraine conflict, potential new sanctions, and fluctuating energy demands. But here's where it gets controversial. Is OPEC Plus playing it safe or strategically positioning itself for future market dominance? On Monday, oil prices rebounded, recovering some of the previous week's losses, after OPEC Plus, a coalition of major oil-producing nations, including the Organization of the Petroleum Exporting Countries, OPEC, Russia, and others, announced a modest output increase of 137,000 barrels per day, BPD, starting in October. This move was less aggressive than some analysts had predicted, leading to a sell the rumor, buy the fact reaction in the market, as noted by Ole Hansen, head of commodity strategy at Saxo Bank. Brent crude rose by 52 cents, 0.79%, to $66.02 per barrel, while U.S. West Texas Intermediate crude climbed 39 cents, 0.63%, to $62.26 per barrel. And this is the part most people miss. OPEC's decision comes despite concerns of an impending oil surplus during the Northern Hemisphere winter months. The group has been ramping up production since April, reversing years of cuts aimed at stabilizing the market. But why now? Analysts suggest that some members have already been overproducing, meaning the new output level may simply formalize barrels already in the market. OPEC even released a compensation schedule for 6 members to make up for exceeding their production targets, with monthly cuts ranging from 190,000 to 829,000 BPB. Meanwhile, the geopolitical landscape is heating up. Russia launched its largest air attack on Ukraine over the weekend, targeting central Kyiv and killing at least 4 people. U.S. President Donald Trump hinted at escalating sanctions against Russia, which could further tighten global oil supplies. Energy trader Gunvor warned that new sanctions on Russian oil buyers could disrupt crude flows, adding another layer of uncertainty to the market. Here's the kicker. Saudi Arabia, the world's top oil exporter, cut its official selling price for Arab light crude to Asia just a day after OPEC Plus agreed to the output hike. This move, as Rystad Energy chief economist Claudio Galimberti pointed out, signals a strategic shift. OPEC Plus is prioritizing market share over price defense. By increasing supply in a market already moving toward surplus, the group is playing offense, not defense. But is this a sustainable strategy, or could it backfire? Goldman Sachs predicts a slightly larger oil surplus in 2026, driven by supply increases in the Americas and stronger global demand, despite a downgrade to Russian supply. The bank maintained its 2025 Brent WTI price forecast and projected a 2026 average of $56/$52 per barrel. With so many variables at play, from geopolitical tensions to shifting production strategies, the future of oil prices remains anything but certain. What do you think? Is OPEC Plus making a bold, calculated move, or is it risking instability in the global oil market? Could Trump's potential sanctions on Russia further complicate matters? Share your thoughts in the comments. This is one debate you won't want to miss.